Well, hello everyone, and welcome to my new channel, E.L.I Trading Strategies. Nice name, right? I want to thank you for joining me on this journey and for taking the time to watch this video. Let me start by introducing myself. My name is Roy. I'm 43 years old, and I've been trading the financial markets for 20 years. You could say I've been through it all, the good, the bad, and the ugly. I've actually planned to launch this channel for quite a while, but you know how it is. Life happens and plans get delayed. And now that the channel is finally live, I want to tell you that my main goal here is to share my experience with you and provide you as much real value as possible. To be honest, I hesitated at first. I always thought that people who ran trading channels probably aren't profitable traders. Otherwise, why spend so much time creating content and managing a channel? But somewhere along the way, I realized that the real reason I want to do this is to leave something behind, some kind of legacy, and maybe get some recognition for the methods and market perspective that I developed over the years, which I think are different from what most traders are used to. Before anything else, I want to make it clear I am not a financial advisor. Everything you see here is for educational purposes only. You are fully responsible for your own trading decision and should always do your own research. Trading is risky. Personally, I blew up several accounts before becoming consistently profitable. That was my tuition fee. Today, I get to enjoy the results. This channel will not be about investing. I will focus on trading and technical analysis only. I trade futures, weekly options, zero DTs, and penny stocks. My entries are based on chart analysis and option chain data. Most of the time, I don't hold position overnight unless there's a special reason. On this channel, I'm going to walk you through my entire process, my pre-trade analysis, my long or short bias, and my real-time decision making. My hope is that you not only understand the logic, but gain real value from it. Now let's take a look at the broader market. The market has been positive for quite some time, forming higher highs and higher lows, but lately we've seen some cracks. A recent low was equal to the previous one instead of higher, which could signal a bit of a buyer exhaustion, though not necessarily a break of the main trend. I believe we've entered the distribution phase, but it could last weeks before any real trend change appears. In the meantime, the market is giving traders a gift: strong upward days followed by sharp pullbacks. And for those of us who know what we're doing and use the right tools, opportunities are everywhere. Now let's analyze the upcoming week. The AAII survey still shows bearish sentiment among investors, which can actually fuel continued upside. But after the strong rally we just had, I expect volatility to slow down and possibly see some indecision, maybe even pullbacks in stocks that ran too far and too fast in the last week, like Meta and Google. To understand how we might profit from those potential dips, we need to see what the option market is telling us for the upcoming expiration. I personally like to use maximumpain.com to study option data and open interest. And I want to give a shout out to Dave and Maximum Pain team for the great charts. The chart shows me where the highest concentration of open options sit and where the maximum pain price is. And for those of you who don't know what maximum pain means, it is simply the price at which option sellers or writers profit the most because the majority of options expire worthless or nearly worthless. This week could lean toward maximum pain because we just had a strong rally and returned to an indecision zone. If anyone watching still doesn't understand maximum pain or doesn't know what an option is, feel free to comment below and I'll make a dedicated video explaining everything. But for now, I'll assume most viewers understand the basics. Looking at the data, Meta has a core wall at 650 and maximum pain is sitting at 622. Google has a call wall at 330 and maximum pain sitting at 310. In other words, if we see mild weakness or indecision this week, those levels are realistic price targets. And with proper leverage or option strategies, potential trades could form. Now here's the important part, the rule you must remember. The second mouse get the cheese, guys. Let the first one get trapped. We have data that suggests possible movement, but nothing is guaranteed. We must be patient and wait for a specific condition to form before entering a trade. And I'll explain about those conditions in future videos. Today, I want to focus on how to approach a new trading week and how to scan the option chain for real opportunities. After reviewing open interest levels, I switched to the stock chart to look for key price levels with high volume concentration and compare them to the option data. And of course, the option price chart itself often gives strong hints about where the stock wants to move in the near term. Keep in mind, options prices move extremely fast, so you need pre-planned conditions and entry levels. And remember, trading is mostly psychology. Unlike investors who make decisions once in a while, we traders make multiple decisions within a single trade. That's why preparation, chart analysis, understanding option behavior, and trading psychology are absolutely essential. In the beginning, it feels like a lot, but with time, it becomes second nature. Kind of like dribbling a basketball with your eyes closed. Practice enough, and you instantly feel where the ball is going next. As we head into another busy trading week, I want to thank you for watching this video. It's only the first one, guys. If you find any value in it, please hit the like button and consider subscribing. In the upcoming video, I'll be showing real-time analysis and short-term trades, so you can see exactly how I make decisions as they unfold. Until next time, guys, I'm Roy, wishing you success and a green week.